Today, guys, I'm going to tell you what is a USDA loan. A USDA loan is when you keep more money, but you get more property. You use your money to get more property. So what I'm trying to say is you're using your money wisely to get more property. The property that you get, you can use that for your kids to play outside. And they can have fun. And hear it from my dad's point of view.
He has a very good point here. I think he's almost there. I'll have to keep him in training for a little bit longer, but he'll get there. Right?
Yep.
Good job, little man.
See you guys next time.
Hello everyone, I'm Brian, the Mortgage Guy, with a new episode. Thanks for joining me today as we discuss the USDA Loan Program. This is a powerful home financing option that many people overlook. It could be the key to your dream home in the country or a small town. So what exactly is a USDA loan? It's a government-backed mortgage through the U.S. Department of Agriculture. It's a rural development division. It helps to pretty much low-income to moderate-income buyers purchase, build, or even improve homes in eligible rural areas with zero down payment. That's the key point, zero down payment. Big, big plus. Now, there's two main types of programs that they offer with the USDA program. The first is the Guarantee Program. That's the most common one. It's originated by private lenders like myself. The other one is the Direct Program for very low-income families. It's handled directly by the USDA. Today, we're going to focus on the Guaranteed Program. Now, the next question I want to ask is, how does it actually work? How does this work? Well, let's get into that. So first off, you apply through an approved USDA lender, such as myself. We review the credit, the income, your ability to repay. The property must be in a designated rural area, of course, and also meet basic safety standards. However, keep in mind that some areas are considered as USDA eligible when those wouldn't even think it to actually be, so it doesn't hurt. It's always, I'll put it this way, it's always wise to go ahead and have a realtor double check that for you to see if it is within a USDA area, a nice rural area, because it is kind of shocking when you find out that an area you're like, I never thought that actually was USDA, a USDA area, like a rural area, and you find out it actually was a rural area. So pretty cool. Many times I've helped clients be able to get that 0% down payment option. Just because of that, they didn't know that. They were going to go with conventional. So, big plus. So, USDA provides a 90% guarantee to the lender. This reduces the lender's risk and allows 100% financing. You pay a one-time upfront guaranteed fee. It's usually financed into the loan in most cases, plus a small annual fee paid monthly. It is a 30-year fixed-rate loan with competitive terms. Now, let's compare quickly to conventional and FHA loans. Now let's start off with conventional loans. Usually they require a down payment 3 to 20% or more depending on the credit score. They usually have a PMI, or we also call that private mortgage insurance, if you put less than 10% down, of course. And they're usually available anywhere, no rural or income restrictions, of course. They don't have any of those at all. Now also, the credit and qualifying can be stricter for best rates, of course, as well. So keep that in mind. Now, on the FHA loan side, typically the down payments as low as 3.5%. They usually have upfront and ongoing mortgage insurance premiums and more flexible credit in many cases. Now, they're available anywhere, but property must meet FHA standards in order to be able to get the loan. So let's look at the USDA advantages compared to those there. Now, with USDA, they get a true zero down payment option. They have a guaranteed fees instead of PMI, and often they have competitive rates too. But they're restricted to eligible rural areas and income limits as well. So in other words, in the area median income, so an area that you're looking to buy into, that area median income, so in other words, what the median amount of people living in that area make, they should be making at least 115% of the area median income. So if you're making within the 115% of the area median income, then you would be eligible to get that USDA loan then. So that's the other piece of the puzzle too. So when should you consider a USDA loan to see if it's ideal? First off, I would say if you're buying in an eligible rural area or small town, that'd be a definite plus. Also, if you have limited funds for a down payment, that would also be a plus too. If you find that your household income fits the moderate limits for the area, that also is a big plus. And if you wanted to build equity faster without PMI, that would be a big reason to push here. It's perfect for first-time home buyers, families, or anyone pretty much wanting more home for their money. So what do you need to qualify? So I would say first off, you need to be within the household income at or below 150% of the area median income. That's first. Second, the property in eligible rural area, it just needs to be in there. Okay, it needs to be in a rural area that's eligible. And there's locations where you can check, and most easiest way to probably check is with your either your lender like myself, or you can also check with a realtor as well to see if yours actually qualifies for a rural area. Now, also, you want to make sure it's a primary residence only, that you're a U.S. citizen or qualified permanent resident, and that your reasonable credit history is set as at least 620 or above, we would say. You also want to make sure you have a stable income to repay the loan, and that the home must be decent, safe, or sanitary. Okay, so that's a very important piece to the entire puzzle. All right, so if you're curious to see if you qualify for a USDA loan, reach out to a mortgage broker such as myself, whom is experienced with USDA loans. I can verify your eligibility, check the property, and guide you through the process. If you are in Massachusetts, reach out definitely, as there are many areas that do qualify. Do keep in mind that this is general information, so requirements can change, so you will always want to verify everything with a licensed lender. Again, thanks for watching, like and subscribe, and drop your questions down below, as I always try to read and answer them as much as I can. So, I look forward to talking to you guys again. Hope to see you soon again.
Also, don't forget to like and subscribe.